To build anything that truly lasts, it takes time.
But for this, let's move forward and let's connect with our experts then. And we have been joined by Deepak Shenoy, who is the CEO of Capital Mind Mutual Fund, joining us on the show. Hi Deepak, morning, good afternoon rather, and thank you so much for your time. Firstly, help us with your take on the markets. It's been a fantastic run for the markets, especially the last week, which was indeed an expiry week as well. But what are you making of the market right now?
In some kind of momentum for mid and small caps. Even today, I think they're up compared to the larger caps. We're seeing some kind of there was a good run for the banking sector for the most part, and that's kind of, I think, maybe trickled into the public sector banks, but the private sector banks aren't doing so well. We aren't seeing major moves in credit growth yet. RBI released data on Friday. Again, not very inspiring from that perspective. Also, with the lowering of rates by RBI, we haven't seen banks go aggressively to cut down interest rates, mostly because banks are very afraid of losing interest on their existing loan portfolios compared to having to give new people lower loans. So lower interest rate loans. So they don't cut rates, meaningfully, and that doesn't excite the economy because they will cut deposit but not lending rates. So to that extent, I think the economy is a little bit wary, but we're still growing reasonably well. The quarter numbers will start trickling in early July. I think that's when we'll know how good or bad this quarter was. By and large, the macro seems quite stable. The government finances have been quite good in the first, I think we'll get the data end of day today, but maybe the first 2 months of the year also, we will have seen government not having too much trouble in terms of its fiscal deficit. The rupee has stabilized or come below 86. So that way, it's a little bit better from an inflationary perspective, also from stability perspective for both importers and exporters. I think overall, market still looking for a meaningful trigger to move up. I think longer term, the core fundamentals of the economy, what's surging, what is not, I think those haven't changed much. We're still looking at defense, manufacturing, financialization of the economy. These are, I think, longer term trends that don't seem to be disturbed by anything that's happened recently.
That's the take on how the market is looking like to Deepak right now. Deepak, hi, good afternoon. Before we come to you for your thoughts on the entire banking space, like you mentioned, financialization seems to be the broader theme. Let's just bring our viewers the latest on what's happening with Inden Bank, because the bank has submitted the list of candidates for CEO position to the RBI. Sources tell ET now that the bank's management has sent 3 names to the central bank, and Ankur is joining us with more details on this. Ankur.
Yes, sources say that Inden Bank likely to have submitted 3 shortlisted candidates for being MD and CEO. Among the choices which has been given, the topmost choice have been given for Rajiv Anand, who is Deputy MD at Axis Bank. His term is going to end in August 2025. Apart from that, we also understand that Rahul Shyam Shukla, who is there at HDFC Bank, his name has also been shortlisted and given to Reserve Bank of India. And we also understand that Bajaj Finance MD and CEO Anup Kumar Saha, who is currently MD and CEO, has also been submitted to Reserve Bank of India as being choice for MD and CEO of Inden Bank. Now, this deadline was at June 30, which was given by the regulator, and for now, we understand that 3 names given to Reserve Bank of India will be scrutinized by the regulator, and after that, a final choice may emerge after the approval of regulator. We have seen that in Inden Bank in April this year, there has been several exits among MD and CEO and CFO after a probe revealed that there was an accounting loss, the derivatives accounting loss which was incurred and revealed on 10th of March, and series of resignation followed thereafter. Reserve Bank of India has approved a committee which is looking after day-to-day operations of the bank currently, but all eyes will be there. Who is the candidate which gets approval from Reserve Bank of India for being next MD and CEO of IndusInd Bank?
Okay, that's what the top brass at IndusInd Bank could look like, and the names which are doing the rounds. But Deepak, hi, afternoon. Just wanted to understand, I mean, we are at just what, 2% away from that all-time peak. Are you putting fresh money to work at all?
Well, we honestly, there is whenever there will be inflows, there will be investments, Aisha. I think we at some point there will always be opportunities in the existing portfolio you own, especially where there are there is tailwinds that seem to be getting stronger. Semiconductors, defense, manufacturing in general, high-end manufacturing, high precision manufacturing to be precise, is also a theme that I think is multi-year. So buying more at the current prices, some of which are elevated, but there is a tremendous amount of growth in the sector as well. So I think those will continue. Not so many fresh ideas, but as times go along, new things will come. There will be opportunities that arise. There are a lot of new listings as well. So as they pan out, we usually look at even say an IPO only after about 2 quarters, and some of the IPOs are reaching the end of 2 quarters now. So that might be that's another opportunity. We're kind of seeing whether some of these will give us meaningful upside from here. I think overall markets will always have opportunities. There's always something to buy and there's always something to sell. So I don't think anybody just buys the market. Well, there may be some few traders who do, but by and large, as an asset manager, you have to be cognizant that some things will be highly priced, but some things will be, right priced or cheap in comparison with the growth that they offer. So we're always looking for those. Still looking at sectors rather than individual stocks so much, but the sectors we've chosen seem to still have a long way to go from here.
Okay, interesting. You say that, but hold on to that thought. We'll probe a little bit deeper into what that list looks like perhaps. Right now, we're scaling lower by about almost 0.5%, and that's pretty much the session low so far. It's not a deep damage regardless. We're still hovering around the 25,600 print for the Nifty futures, and select stocks are holding up on either side. Of course, Axis, Maruti, Hero Motocorp are the key pressure points in trade today. Deepak, I just want to get back to the list of sectors that you were talking about. And it's interesting that you say defense, because sure enough, it's a structural story, but one would question whether part of the meaty rally is already behind us or not. Where within defense are you adding more names? Is it more of the same? Or are you doing more deep dive into some of the specialty companies, drones, etc.?
Actually, it's drones. I think, they're all part of the overall architecture. Here, the concept is simply that India is trying to move away from trying to be dependent or being dependent on foreign countries for arms for most of the defense needs. And we've seen this happen, reach a boiling point kind of thing recently, because you had a war with Pakistan, which many foreign countries didn't seem to support us. From that perspective, it's clear that India will have to make sure that its defense needs are met mostly internally. 2 years ago, the program, or 3 years ago, during the Ukraine war's initial phases, India started to diversify away from imports. We're the second largest arms importer, and we should not be. We should actually be a manufacturer of arms, and of our own, for our own needs. And I think that's where the opportunity lies. So whether it is in the shipbuilding part of the things for the Navy, submarines, and so on, whether it is semiconductor based or making systems for missiles and for other parts of the ecosystem, or even anti-drone devices. Lots of different companies with different parts in each one of them. A lot of large companies actually have their feet in multiple baskets, so they have defense subsidiaries which are likely to see substantially more business. So a combination of this is where we're looking at, and then there's downstream, because if you make a ship, you're going to have an engine. That engine needs to be manufactured domestically. There are a few companies that manufacture engines for ships, which are listed as well. So again, those are downstream beneficiaries. And lastly, I think overall, whether it is drones or some of the new technology pieces that are being used by the armed forces, I think a lot more of this will have to be developed, assembled, and managed from India. So that is also an area where you're going to see some movement. But at this point, it isn't clear who the clear winners are. So you're going to have to buy a lot of companies and then wait for which company can execute better, and then kind of double down on the ones that are winners. So our approach is like that. It's a nascent sector. I would say this will downstream benefit our manufacturing sector as well, because a lot of the input parts will have to come from domestic industry itself. So whether it is gears or whether it is like I said, engines or a few other things that come in, they will be manufactured by people who aren't only in the defense space, but they are relatively small today and can get large orders that make them attractive.
All right, so that's about the defense pack. But Deepak, within banking, interesting what we see today, that is the public sector banks are doing well, while the private banks, the names are lagging behind. But in comparison in both, we have seen the private names doing better. But the other fact of the matter is that, Deepak, for today, some of these beaten down names, case in point being RBL, Bandhan, they are doing very well today. Help us understand anything that is exciting when it comes to these names. Why is the investor or the trader confidence getting back?
It's a good question. I don't know about what happens on a daily basis, to be honest. So I am not the right person to comment. All I can say is overall, I don't think the banking system is at a situation where the default levels will rise tremendously from here. There have been pockets of concern in the MFI industry and so on, but I think by and large they're going away. And hopefully, with lower interest rates, this will ease the issues in some of the banks that have seen stress on their book. Having said that, individual banks will move in any direction on any given day. There's no reason that I can attribute to it. If you wanted more structural concepts, then I'll have to wait for results to figure out if this quarter was better. But I think overall the banking system is actually stable, but it's not growing meaningfully, which is why some of the private sector banks, which were richly valued maybe 2 or 3 years ago, are not quite as richly valued. So if you make a 14% ROE and grow at 15% a year, you're not going to get like a price to book of 4 times or 3 times, or and a price to earnings of 25 or 30 times. You're going to work with price to earnings of about 18 times, and growth of and price to books will be correspondingly lower at 2 times. So I think that way, the private sector banking consortium is constricted, but the public sector banks, which were relatively cheap, have consolidated and grown. So you're willing to give them a slightly higher price to book or price to earnings because their ROEs are starting to inch up as well.
Okay, Deepak, appreciate that view, and thank you so much for joining us on the show. On that note, we'll let you go.